Hi guys, let's look ahead to the key events and themes this week. Let's start off with the US dollar. We do have the Federal Reserve rate decision where they are expecting to keep rates unchanged in terms of policy also. We're looking for a dovish statement to accompany that. So dovish hold in my view here as they've received knockback after knockback, low inflation with signs of deflation across some sectors of pricing and also a contraction in consumer spending. So look for the Federal Reserve potentially to stress their concerns around inflation. Yellen has noted on a number of occasions that it's only due to temporary factors, but that could change at this statement in terms of her wording around that. Elsewhere, we do have the US GDP Q2 advance reading. Last quarter, we did see a softer number, so markets are looking for a bounce back to around 2.5%. Anything lower will likely add to that further dollar pressure, so the dollar could be in for some trouble this week then. Looking across the Atlantic over in the United Kingdom, we do have the UK's also respective GDP reading. After an abysmal Q1 of 0.2%, analysts are expecting a little pickup to 0.3%. In terms of economic data or indicators heading into this number, wouldn't be surprised if we do see a lower number, guys, which could really dampen the UK's or the GBP's recovery that we've been observing. And elsewhere, the talks between Britain and the EU are due to continue in terms of the Brexit deal. An interesting poll conducted by Reuters out of 36 economists, mainly at larger banks. 1 in 3 of them actually do not see Britain and EU coming to a deal before the divorce in March 2019. So just be wary of that. Over some time, these talks could continue to gather that spotlight and potentially weigh on the pound if no progress is being made, which there are little signs of that at the moment. And elsewhere, looking over in Europe, we do have its respective manufacturing PMIs. They are expected broadly in line with the previous readings. As we've seen consistencies in the bloc's data points, as we've highlighted by Draghi. He's seen encouraging signs of recovery for the Eurozone. So there's little in the way at the moment in terms of stumbling blocks to stop Euro from continuous move north. With focus on Euro dollar, eyes are on that 120 region, guys. So just be very wary of that. Over in Australia then, we do have the country's respective inflation numbers. The CPI expected to remain subdued at 0.4%, not being helped by the fact that wages are weak in the country, so not helping prop up prices. They are remaining low. An interesting thing from last week, we did have the RBA minutes where a particular comment got some focus and promoted some Australian dollar strength, and that's the fact that a neutral rate was discussed, a neutral rate of around 3.5%. But the Deputy Governor of the RBA quickly came out and said no significance should be read into the fact that they discussed that at this particular meeting. So we did see a bit of weakness in the Australian dollar on the back of that. The reason why I mentioned that, we do have the RBA Governor Lowe speaking on the labour market, which has improved substantially, and also monetary policy. So as we know, historically they don't like a strong Aussie dollar, so do not be surprised if he tries to talk that down, guys. So just be very aware of that, mark that in your calendars. Very lastly, looking over in Canada, we do also have the GDP for the country. That's expected to remain at 0.4%. on a quarter-on-quarter basis. Last month did show a 6th consecutive month of gains for the Canadian economy, continue to grow across a majority of sectors. And as we've seen, the Canadian dollar has really been gathering some pace and strengthening across the board. Looking particularly at loonie dollar CAD, it does look subject to some further south moves with eyes on 119. So other than that, that's it from me. Have a smashing trading week. Thank you.